Hello, students. The activity that we will be doing today is a preparation of a worksheet which is a 14 column. We call this 14 columnar worksheet. By the way, I'll try to speak in English as possible for the interest of my foreign students in the school where I am teaching this one. But this will benefit not only my actual students but those of you who uses my channel para aralin yung accounting for those other students who wishes to study using my materials. Now what we will be doing today is to reconstruct our unadjusted trial balance coming from this adjusted trial balance. Take note that when we are talking of adjusted trial balance, we are already done with your adjusting entries. Okay, let me just hide that portion. So, meaning to say, if we will add this, all the debits, we will get this amount at the bottom. Okay, and if we add all the credits, we will also get the same amount and they will tie up. The total debits will tie up with your total credits. We have already considered here the adjusted trial balance. But what we will be doing is to reconstruct from the adjusted trial balance that we have here, we will find out what is the unadjusted trial balance given these adjusting entries here. We have adjusting data A, B, C up to letter G. So we have 7 transactions here. Accrued service revenue amounted to 23,800. Supplies used during the year is 69,600. Prepaid insurance expired during the year is 64,000. We also have depreciation for the year. First is 148,000 and second for the equipment 77,400. We also have an accrued wages expense for 25,400. We also have accrued interest expense for 20,000. And last, we have your unearned service revenue earned during the year, 154,000. So you have to study carefully. You have to analyze the transactions carefully. For example, unearned service revenue earned during the year. This is a liability account, unearned service revenue. But it was earned already. So, meaning to say, prior to your adjustment, this amount should have been part of your liability. So, our problem usually lies on analyzing actions and sometimes students tend to overthink. Now, the requirement here is to reconstruct the unadjusted trial balance. In a 14-column worksheet, we have to journalize the adjusting entries A to G transactions, right? And we have to extend this adjusted trial balance, the one you see here, okay? And we will have to prepare the income statement and the balance sheet. Then once we identify the income statement and then the balance sheet, come period end. For example, at year end or at month end when necessary, we have to prepare the closing entries. Usually these are being done at the end of the year because we prepare the financial statements. For purposes of monthly closing entries, okay, this is also being done for purposes of monthly recording, but normally, well, some companies do not do this. They only do this at year end. We have to extend the worksheet for the closing entries and prepare a post-closing trial balance. Okay? And then, we need to prepare the income statement, statement of changes in equity, and then the balance sheet. Okay? This may be a struggle for some, okay? But if you know the concept, pardon, if you know the concept, if you know, it will not be really that difficult, okay? But for those who are still struggle on this part in accounting cycle, let me help you on this one. So I have this worksheet, a 14-columnar worksheet. What you will see in a 14-columnar worksheet, of course, you will be seeing 14 columns from columns 1 to 14. But you also have this one for the details, and this is not counted in the 14 columns. So if we will count including this one, it will be a 15 columnar. But for the descriptions, this is not counted. Okay? For the first and second column, it represents your unadjusted trial balance. Once you perform adjusting entries, the adjustments will fall under your columns 3 and 4. It will always be in a pair because you have your debit and you have your credit. And when you total, when you tally, when you get the sum of this, it should always balance. Otherwise, there must be something wrong in your unadjusted trial balance or in the columns in general in plotting the figures. So again, unadjusted trial balance is represented by columns 1 and 2. Adjusting entries will be represented by columns 3 and 4. The adjusted trial balance is for columns 5 and 6. Meaning to say, from this illustration, from this exercise, this will be plotted, this will be presented under your columns 5 and 6. When you see, when you take a look at it, okay, these are the amounts. Okay, sorry. I froze the sheets here so that we can move and we can see only the important info. So we have your cash, accounts receivable, supplies, which is basically a copy of this one. From cash account up to the interest expense. So if you take a look at this one, from cash to AR to supplies until the interest expense account. Okay? Now, we will just get the amounts. We will plot the figures in columns 5 and 6 because this pertain to your adjusted trial balance. Okay? Now, what to do? For column 7 and 8, it will be your income statement. For columns 9 and 10, it will be your balance sheet. Or some uses column 7 and 8 as the balance sheet and 9 and 10 as the income statement. But it doesn't matter. Okay? You can switch them provided that you have to plot the income statement and then the balance sheet for 7, 8, 9, 10 columns. Okay? So you have your balance sheet and then the income statement. For columns 11 and 12, this is for your closing entries. Okay? Closing process, your steps 1 to 4. And then, for columns 13 and 14, this is where we will find the post-closing trial balance. Okay? Now, let's go back first to column 5 and 6, which is your adjusted trial balance. Okay? And from time to time, we will be going back to your Word file so that we can take a look at the problems because it is not available in this Excel sheet. Now, let's go here in this Word file. Adjusting data at December 31, 2020 suggested that accrued service revenue amounted to 23,800 was affected. Okay. In this case, the accrued service revenue is an accrued income. Okay? As if we will go back in columns 3 and 4, there is a color coding. Meron akong ginawang color coding here. Now, let's find this amount, 23,800 for accrued service revenue. What is our adjusting entry for this one? We will debit. Okay, for this purpose, I use the accounts receivable for our debit entry for 23,800. And then we have to credit service revenue. That is why this row here for service revenue is where we will find 23,800 as part of your 177,800. Okay, notice here you have your 1,800 plus 154,000. There is an included 154,000. That is why it is not the same as with your 23,800 adjustment for letter A. Okay? But this is where you will find it. Now, for letter B, supplies. Okay, supplies used during the year, 69,600. What is our journal entry there? Our journal entry will be a debit to supplies and a credit to supplies for 69,600 used up. Remember that this is a prepaid asset. Supplies, we have to utilize the 69,600. Initially, it's set up in the supplies account in your balance sheet, but then we have to transfer this amount to your profit or loss. That is why the 69,600 is presented as a credit under your supplies row. And then we will go to the supplies expense and we will find the debit portion. Okay? So this is where we will find this one. Now, that's transaction letter B. Again, our journal entry here, because it is also a requirement, right? In number 2, we debit supplies expense, this one, and then we credit supplies. Okay? I hope you follow. Now, if you have questions, you may comment down below. Next, letter C. Prepaid insurance expired during the year, amounted to 64,000. How do we do that? Okay? What is our journal entry, our adjusting entry? Part of your prepaid insurance has already expired, so we debit insurance expense and we credit prepaid insurance. Therefore, in your adjusting entries column, let's look at the prepaid insurance. There is a credit here for the amount of 64,000 because we have to deduct the 64,000 from that amount, right? And let's go to your insurance expense for the debit portion. So we debit insurance expense, 64,000, and we credit prepaid insurance. Okay? That is our journal entry for transaction letter C, and we have to plot it here in your adjusting entries columns. Let's proceed with transaction letter D, depreciation for the year. For building, 148,000, and for the equipment, 77,400. So, how do we do that? And what is our journal entry? Our standard journal entry for depreciation is a debit to depreciation expense and a credit to accumulated depreciation. So, where is our depreciation expense? We have separated depreciation expense for building and for equipment. Normally, if we have a lot of fixed assets accounts or property, plant, and equipment, long-term assets, so we have to identify depreciation expense for what. The first one is for the building. The second one is for the equipment. So we just have to pick up the numbers, the amounts, 148,000 for the building and 77,400 for the equipment. Debit. That is why they are in the debit column. Okay? Let's find the color yellow. The amounts highlighted in yellow. Our credit will be your accumulated depreciation for building, for your equipment. That's why you have these amounts here. I hope you can still follow. Now, how about transaction letter E? Accrued wages expense for 25,400. This is an accrual, accrued expense. We have incurred wages already, but it wasn't paid yet. So, our journal entry will be wages expense and credit to wages payable. So, if we will see here, we have a debit to the wages expense, 25,400, and a credit to wages payable. We have one debit and we have one credit. Okay? That is for transaction E. For transaction F, it is similar, but we have a different account. Accrued interest expense. So we will find interest expense here. Where is your interest expense? Here, at the bottom part. Debit side, right? And then we will find interest payable here under your liability section for the amount of 20,000 under your credit column, column 4. Okay? So we were already, na-plot na po natin, ano? We have already plotted the interest expense and interest payable in the columns. The other one is for the debit side, the other one is for the credit side. We should always maintain the equality of the debit and credit. Okay? For transaction letter D, this one, unearned service revenue earned during the year. So this is where you will find the other amount for the service revenue because earlier we have the accrual, okay, accrual of income of 23,800. Now this is the last 154,000 for the last transaction. A credit to your service revenue and a debit to your unearned service revenue. A decrease in your liability account. Okay, so this is the portion. 154,000. Okay? So if we will have to journalize this one, debit, unearned service revenue, and credit service revenue. If we have to get the total of this one, which is a requirement, when you are creating a worksheet, you have to tally all the amounts at the bottom. So it should balance. The total debit adjusting entries should total with your credit adjusting entries. 582, 200 for the total debits and 582, 200 for the total credits. So that's how we reconstruct the journal entries and reconstructing it. Okay, reconstructing the unadjusted trial balance, we'll just have to figure it out. Debit plus debit equals, okay, debit here. For the asset portion, for this one, cash, accounts receivable, supplies up to your equipment, debit plus debit. Okay? If there is a credit balance, it has to be subtracted. For example, we have our accumulated depreciation. Okay? But the normal balance of an accumulated depreciation is credit because this is a contra asset account. That is why it has to be placed in the credit side. Although this is an asset, this is a contra asset account because it reduces the cost of your building and the cost of your equipment. So be careful not putting it on the debit side. It should be on the credit side. Okay? Now for liabilities, credit plus credit. Liabilities including income. Okay? Capital, I mean, and income, of course, with the exception of your withdrawal account. You have to organize them according to their normal balances. Liabilities and equity, the normal balance is credit. Therefore, the normal balance should be on the credit side. If there is an adjustment, okay, on the credit side, meaning to say, there was an increase in your liability or equity account. That is why, if we have to go back to your unadjusted trial balance, the credit should have been deducted. For example, for my accumulated depreciation, per the adjusted trial balance, we have 327,400. But because there 77,400, before that, when we have to reconstruct the unadjusted trial balance, the accumulated depreciation should have been 250,000 before adjustment. Because this is a credit balance, right? 250 for the unadjusted, and there is an adjusting entry for a credit of 77,400. That is why in our adjusted trial balance, we have this amount of 327,400. So for assets, okay, for expenses, what else? For the drawing account, the normal balance is debit. And then if there is an adjusting entry for a debit, you have to add it. If there is an adjusting entry for a credit, you have to subtract it. For liabilities, equity, and revenue accounts, the normal balance is, if there is a credit adjusting entry, you have to add it. If there is a debit adjusting entry, you have to subtract it for you to get your adjusted balance. However, in this case, we are working back. We have the adjusted trial balance and we were able to identify the adjusting entries. So it's the opposite. If we have a credit balance of 339 and there is a credit adjusting entry, we have to subtract for us to get the unadjusted trial balance. Okay? I hope you see in my point and you understand what I am referring to. Okay? So, we already have your columns 1 and 2, 3 and 4, 5 and 6. 5 and 6 is given, right? 3 and 4, we have to identify based on transactions A to G here, right? And then, we have to work back the unadjusted trial balance. This is what we mean with the requirement number 1 to reconstruct the unadjusted trial balance in a 14-column worksheet. Okay? We are already done with number 2. Journalize the adjusting entries. It was explicitly mentioned when I was explaining this one. There was no entry here. Okay, sorry. There was an entry here. You will see here below. And the color coding for your reference, right? So for my actual students, I will be giving you this file. For my not so actual students, for my virtual students, no, not enrolled in my class, if you want a copy of this, you can simply message me in the comment box. Okay? What else? So we already have the adjusted trial balance. Now, from your adjusted balance, we can already prepare your income statement and your balance sheet. Okay? For the income statement, we will be starting with your service revenue, income accounts. Income statement presents your income accounts, the revenue accounts, and then the expense accounts. Our service revenue here is 2,587,800. We just have to pick the amount and put it on another column, column 8 for the credit. For the expenses, we just also have to copy the amounts here and place it in column 7. And there you go. You have your income statement. But it's okay if after you tally them, after you add the balances, there is a discrepancy. For columns 7, 8, 9, and 10, it's normal for you to have a discrepancy once you add the total debits and the total credits. For example, my total credit is 2,587,800. I only have one entry here for the service. Multiple accounts here. When I add them all together, the amount will be 1,077,600. What's the difference? The difference is 1,510,200. Okay? For that portion, you have to place the amount, the difference, on the column, okay, of the smaller total. If I have 2.5 here and I have 1 million here, I have to place the difference below the 1 million because this is the smaller amount when comparing the total debits and the total credits. Now, the same with your balance sheet. You just have to pick up the amounts from your adjusted trial balance and move them to columns 9 and 10 for the debit and credit side. Okay? 531, 650, simply a copy of these amounts here. Up to the withdrawal amount. Okay? Withdrawal row. So we just have to pick it. Okay? Now, same thing. You have to total them. Add them all together. You will get a total debit of 6,213,200. And for the total credit, you will get 4,703,000. You get the difference and you place it on the below the total with a smaller amount, 4.7 versus 6.3. You place it below the 4.7. Okay? The difference is 1.5 million. If you will notice, this is the same amount in the income statement. when comparing the total debits and the total credits. Because this amount here, the discrepancy represents your profit or loss. Remember, revenue less expenses equals your either profit or loss. If the revenue is higher than the total expenses, you will gain a profit. But expenses, the total of the expenses are greater than your income or your revenue, there is a net loss. In this case, we have a net profit because the credit is greater than, the revenue is greater than the total of your expenses. You earned, okay? The difference will eventually be transferred to your balance sheet through your capital account, M Express Capital. After now, what will be our journal entry for the closing process? But by the way, as a as part of your preparation of your worksheet, you have to total them. You have to tally them. You have a subtotal here. This is your subtotal, by the way. And then you have to add the profit or loss. Okay. If in the income statement, the discrepancy, it falls down on the balance sheet, it's on the credit side. Again, there is an equality between the debits and credits. But after adding this one, you will get a 2.587 debit for income statement and your 2.587 credit in your income statement. In your balance sheet, you will get this one, 6.2 and 6.2 because you have already considered your net profit or loss. I hope I'm clear on that. Okay? Now, you have your column 7, 8, 9, and 10. Okay? Without any closing process, this is your 10 columnar. But usually, if we will have to perform the closing process and the preparation of your post-closing trial balance, that is why we are utilizing columns 11 to 14. For columns 11 and 12, this represents your closing process. The closing process is closing your income statement. Okay? How do we do that? If we have 2,587,800 here on the credit side, for us to close it, we will put it as a debit in your closing entries column so that it will offset. There is a credit here in your income statement. There is a debit on your closing entry. Once we add these two, there will be a zero offsetting of the balances. The same with your expenses. If in this income statement, it is placed on the debit, on the closing entries, it will be placed on the credit so that they will offset. 480, 400 minus 480, 400, it will be zero now. Okay? So that's how we do. Now, to formalize the journal entries, you will see here our journal entries for the closing process. Debit service revenue and credit income summary. Remember the 4 steps in the closing process. Step 1, close the revenue account. Step 2, close the expense accounts. Or you can do either. You first close the expense accounts and then close the revenue account. It doesn't matter. What matters is that after the 2 steps, the revenue account and then the expenses accounts are now zero. Our debit or credit will be your income summary account. For service revenue, we debit it and we credit the income summary account. For expenses, once we close it, we debit income summary account and then we credit those expense accounts. But the income summary is simply a temporary account, meaning to say we will have to close it then. We will have to close it soon. Okay? We just have to close the income statement accounts first. So that is why you have these amounts. Okay, if you prepare a T account, in our income summary, the service revenue is placed on the right side. Okay, the expenses are placed on the left side. So whatever will be the difference will represent your profit or loss. So basically, we are just combining the accounts in one T account, in a temporary account called the income summary account. So this is the credit side. This is the debit side. Okay, let me just share it with you. If I have to prepare a T account, okay, for income summary, this is my income summary account. This is my, I will have to place the credit and then I will have to capture these debits here. Okay. Now, we will get the total. What is our total here? We have to add all the debits and we also have to add the credits. Now, there is a difference of 2,587,000 minus 1,077,000. This is your amount earlier, correct? Million. This 1.5 million represents your net loss, net profit, because it's on the credit side. This is your credit side. This is your debit side. And then, for the step 3 of your closing process, we have to zero them. We have to close this temporary account because income summary account is a temporary account. So for us to close this one, we have to make a debit. This is where step 3 comes in your closing process. That is why, as you will see here, for step 3, we debit income summary account, which is basically this one, and we credit the capital account because it will be transferred now to your capital account, the 1.5 or 1,510,200. After that, it will now be zero. Okay? So we have closed the income summary account. Now, take a look at this one. For step 4, if you have a withdrawal or a drawing account in your trial balance, you also have to close it because a drawing account or a capital account, a withdrawal account, is a temporary account as well. It's just that it is placed on your balance sheet account under your equity section. The normal balance of your drawing account is debit. For us to close it, we have to credit it. And the other account, our debit, will be your capital. We just transfer the withdrawal account to your capital account. That is your closing process, step number 4. If there is a withdrawal account. Okay, that is why you have this closing entry here. Now, take a look at this. Columns for 11 and 12. This is your step 1. This is your step 2. Okay? Your step 3 is what? Oh, this one, right? Income summary, debit, credit to capital account. This one here. And then for your step 4, we closed your withdrawal account. This one. And it will have to be closed to your drawing account, to your capital account. Okay? Initially, it's on the debit. Let's look at your balance sheet. It's on the debit side, your withdrawal account. Okay? For us to close it, it has to be credited. Okay? Oh, sir, asan yung kabangga? Andito po yan. Okay? Except that in this case, we have compounded them because our income summary, we have earned a profit of 1.5 million. There is a withdrawal account of 904. If we get the difference, 1.5 minus 904,000, this is your 600,000 here. 606,200. This is already a net effect of step 3 and step 4. Okay? So, combine steps 3 and step 4. See here, once you total it, 2.587, 2.587, there's still an equality of the debits and credits. After you close the entries, the income statement account are now zero. The income statement accounts will now be zero. What's left will only be your balance sheet account. That is why in columns 13 and 14, we have your post-closing trial balance, affecting only your balance sheet accounts from cash up to your capital account. Notice that our withdrawal account is closed. Okay, that is why it's not reflected in the post-closing trial balance. Although initially, when there is a balance here, before closing entry, there is a balance, right? But because this is a temporary account, in the post-closing trial balance, it will not be reflected. But take note that the amount here for the M Express Capital is already adjusted. Your initial balance for the balance sheet is 1,177,200. Effect of your closing process is 606. So it will be added. That is why the new balance, the ending balance after closing entry for the M Express Capital will be 1,783,400. And there we have your 14-columnar worksheet as required by the problem. Okay, extend the worksheet for the closing entries and the post-closing trial balance. Then prepare the income statement, statement of changes in equity, and then the balance sheet. Okay, where is it? I'm not sure if I included it here. I think it's not included. But how do we do that? Actually, your balance sheet, your income statement will then be prepared using this one. You just have to formalize this, present it in a formal way, okay? And then so your income statement. Changes in equity will simply be your beginning, this one, beginning capital account before closing entry. And then what? What do we do after that? We have to add any additional investments. We have to subtract any permanent withdrawals. Okay, we have to add the effect in the profit or loss, and then the closing of your withdrawal account. So basically, this is the movement that you will be seeing in your statement of changes in equity. Okay, it's just that it's not presented here. Okay, so let me know, class, if you have questions on this 14 columnar worksheet exercise. But I hope I was able to help you clarify this matter here. Okay, thank you very much. If you have any questions, please comment down below. I'd be happy to assist you. Until then, bye-bye.